What's going on, everybody? Chris here. We're going to do risk management and just how I'm applying it in trading. And we went ahead and asked ChatGPT. So I'm trading the markets today on the futures, MES. I have a $2,500 account. I want to have a regressive risk per trade strategy. Give me a risk management plan on how to how much my max loss per day should be and the percent risk per trade. So it says that risk management is essential aspect of trading. It's important to have a plan in place to help protect your account from large losses. Here's a risk management plan for a $2,500 account, regressive risk per trade strategy. Max loss per day. Your max loss per day should be no more than 2% of your total account balance. So it's saying $50 is my total max of what I could lose. This means that you should not let your total losses for the day exceed $50. So I think the way it's set up for me right now, it's $80 if I lose one trade. Percent risk per trade. Your percent risk per trade should be determined by the number of trades you plan to make per day. If you plan to make one trade per day, then you can risk up to 2% of your account balance or $50. So if you plan to make two trades per day, you should risk no more than 1% or of your account balance or $25 per trade. So I don't know if I'm going to be able to bring it as low as $25 to where I could risk to where I could do two trades. I don't know. It's something I have to think about. But yeah, that's kind of a two kind of strategy. You could either do two separate trades and slowing things down and having two trades in the day, or you could do 2% in one trade, having a scalp and a runner. And I'm doing the scalp and the runner right now, and it's a little bit bigger than 1% per or like bigger than 2% since I'm doing one trade. So it's roughly maybe it is for the two micros puts me at $80. So yeah, it's a little bit more than 2%. For example, if you plan to make one trade per day, you should risk no more than $50. Blah blah blah. If the stop loss you set for the trade is $500, you should not risk more than 10% of your account balance on that trade. It's important to also consider that the markets are unpredictable. Okay, and then I asked it to give me, so if I'm doing a split strategy, a scalp and a swing, give me the best way to do it. And it says basically 1/3 scalp, 2/3 swing, and then it says a 2-to-1 for the scalp and a 3-to-1 for the swing. So in my bot that I got right now, I'm doing a 2-to-1 and a 5-to-1. Oh, we're in profit. Yeah, we're doing a 2-to-1 and a 5-to-1. Yeah, so like there's some statistics with that. I think we can. There's somebody on YouTube that's already done most of the research. If we go to watch later, we go to the bottom. Risk management somewhere up here. I got a lot of food videos saved. I thought there it is. There's one of them. Where's the other one? Because this guy, he does a really good one on risk management. I'm just surprised I don't have it, so I'm gonna have to go on his channel and then search risk management. So yeah, funded account. Maybe that's it. Okay.
Calculator, and I put in some funded account.
So
this video is going to be over
we turned
how
down
I
the
trade
volume
funded accounts.
so that we
the
could
first
talk
thing
about what's
to
going on.
Notice is
in
we're
the
going
video.
to be using Apex
But,
accounts as an example because it's what
He's
I have
got
experience
Apex
with,
accounts,
and the
so I got the
25K and
50K
50K
account.
accounts but
And
this can
then
apply for
he,
any account and
he
drawdown
says
type.
1%
The account size
of the
listed
account
here, 25K, 50K.
is
If you were to use
$500.
1% of that account,
So that
right?
sounds weird
1%
because
of
it's not really
25,000 is
$500.
$250,
It's really
which if you look at your drawdown, is
the trailing
actually
drawdown
17%
is really the account
of
size.
your drawdown. That
Until
means if
you
you lose
pass
6 trades in a row, your account is gone. And similarly with the
you won't really
$500 drawdown
have
of
anything in
the
the
50K
account.
account, if you lose
So it's a
5
weird
trades
kind
in
of
a row,
math. So
your
like
account
that
is gone.
$500
You don't
is
really
wrong.
have the 25K and
So
50K
it's actually
accounts, right? You really actually have a $1,500 and $2,500
of that.
account. So
Yeah, it'd be
thinking about
$25.
that, if we go over to the scale that I made, basically using the drawdown value to calculate your risk.
Is already
so if you
wrong.
have $1,500 and want to know how much
But
to trade,
as far as
it
an
kind of comes down
example,
to how many
you know,
trades
1%
can
of
you lose
50,000,
before you lose the
it's
account,
not bad.
right?
But
And so
the
this
biggest
top
things
end right
were
here,
the win
1
rate
to
and risk to
4%, right?
reward.
You can
So
lose
risk to
quite a
reward
few
here,
trades between 25 and
you
100
would
before
only
you lose the
need, it
account,
looks like,
assuming
if you had a
a
5 to 1,
-1 R. However, that's
you
going to
would
take a
you
lot of
would
time
be
to
okay
get
with a
funded, and
20%
some
win
funded
rate.
accounts have time limits on them.
4 to
So
1
if you
starts
get down to
becoming 30.
here, right, where you're risking a lot
and
more,
then 3 to 1.
yeah, you
which
might
is what
get
the
funded
bot,
quicker, but
the
you
bot
also have the chance of
suggested
losing your account
a
quicker
2 to
if
1
you
and a 3 to
lose,
1.
7, 8,
2 to
9
1 for the
trades in a
scalp,
row.
3 to 1
I
for
believe
the
the sweet
swing.
spot allows for
And
10 to
then
20
the
losses
swing
before
puts us
losing
up
your
to
account.
30% win
Right
rate.
here. So
and then
taking the
scalp
median of that
puts us
at
up to
14 trades,
40%
right?
win
I believe
rate.
my system,
So-
I won't lose 14 trades in a row.
But if
right?
you
So
able to
knowing
get 5
that
to
on the
1,
$1,500 account,
then you're
right,
you're
or
golden.
drawdown for the 25K
So like
account,
I
I would personally
I like
trade
the 5 to 1 just because that's like a real swing, right? I don't know. That's what a swing is to me, a 5 to 1, and I like to give it that chance. If you know, if anything, I made money on the scalp, which will fund the next trade, or you know, which I just see it as like insurance for the failed trade in the day or the drawdown. So that's kind of how I see it. Is that how the scalps work? The scalps are pretty much there to fund the swings, or you know, pretty much decrease the amount of loss in the drawdown, and it's basically to make those losses small. And then the swings are there to make the gains big, like the longs, the swings. So then he goes into more stuff, which is the ratio, risk to reward ratio, and the amount of wins to losses, and it looks like this is a 4 to 1, and I guess it's another way of explaining the graph that he had over here. And then this is a position size calculator, and I think that pretty much ends it. But yeah, this was also really cool, which is the number of losses in a row to lose on an account, risk per trade. So like drawdown table. This is using the example of $1,500.
Order canceled.
This is basically, I think this is kind of universal, that if you risk 1%, you have at least like 100 trades. That's the idea. And then 2%, it's 50 trades. So you want to stay approximately in the 1 to 2% area, because then at least you'll have the chance of having the highest amount of trades. So that's kind of why 1 to 2% risk is really ideal. It's because it buys you time, and then the swing scalp position, if you're able to have a split position, buys you small loss and big gain at the same time. If your swing is able to be successful, so that's kind of like the quick practical of just what GPT said, and kind of applying what's there on YouTube. That's really useful. As far as like the practicals, so it looks like the positioning got stopped out. I don't know.
Order filled.
Okay, we're going back in. It looks like the only ones that really lost were the bottom two. So one account is already passed. I'm trying to get this one passed. Just got to put it $3,000 in profit, and then these two have to be in profit about around $2,300, $2,500 so it's got a little bit of way to go versus the next one in line. Yep. And then right now we're looking at a continuation. So we want to see a 1 minute market structure break to the upside if we can. It would be nice if we're in a 5 minute bullish order block, so we'll see. I don't know what kind of volatility we're gonna get, but right now we're kind of coiling. And it's acting squirrely, and we're just kind of trusting our entry bot and seeing if we're gonna be able to weather the storm here. We don't know, but technically, on the counts below, we've exceeded 1% loss, and the ChatGPT said not to go more than 2%. So it said $50 is 1%.
Order canceled.
So did we get hit? Yeah, we got hit. Let's see. Oh, you know what? So those two accounts. So here's another practical. So it's the risk parameter area, and it was a parameter set by me, auto liquidate threshold. So this is roughly 2% loss on the account per day, and we hit the auto liquidate threshold, and we automated to where we could live to fight another day. And that's fine by me. I mean, it's Monday. It's a low percent chance of me doing well today. We're still giving it a shot for the first account because it's still in profit. We're trusting and believing that this trade will work out for this account. If it doesn't, we'll just drop it, wait for the next day. We'll live to fight another day. Just because if it's volatile, it's going to be just volatile all day. It's either going to give it to me, or it's just going to be volatile all day. So right now, the account with the risk management rules is it's taking over. So it basically said, okay, you're not allowed to trade anymore. We got to just get out of here. You're not allowed to trade anymore. I set those rules, and we're going to follow it. And that's how we're going to stay in business. But we're going to ideally see if we could get some kind of break to the upside. We're front running it before getting in. So we're going to wait and see. Now, to finish just the practicals. So this in itself for making a trade plan. So a trade plan would be a practical to put all these and make them practical. And these are like rules, and you could put these rules either inside the trade manager with the trade parameters set by the trader, which is setting the loss per day no more than 2% or 1.5%. The risk to reward ratio is in the automated in the bot, and then the entry is automated through the bot. So it's automatically by automation. Most of these are being met. So this top half just by automation is already being met. So this is more discretionary, the smaller time frame, so that kind of falls under my responsibility. that I have to govern, and then trading outside high probability times. So these bottom ones, except they're risking more than 1% per trade, for the most part, these are the ones that can't be automated, and that I have to govern myself. Trading outside a high probability trend day. The high probability trend days are Tuesday, Wednesday, Thursday. I'm just taking a chance here. And then trading outside high probability times, which is from the outside the high probability times is pretty much like noon to the ASA session, and then about 6 and anything before 6 a.m. In the London session. So those are probably the outside the high probability times. The high probability time is around like 7 to 10:30, which is like London close, New York open, New York in first part of New York session. So for the most part, that's the practicals, and then the more advanced kind of practical is like, so we have statistics that say the high probability trend days are probably like Tuesday, Wednesday, Thursday, and then high probability trend times is like 7 to like 10:30. So then other ways you could just kind of slow things down is by splitting up accounts by a fast and slow entry signal. So right now I just kind of made all the accounts go long, and instead of splitting it up, I could have had it to where half of them, instead of trading all, so because I already passed one account, I traded all three. I could have did 1/3 on the fast and then 2/3 on the slow signal. So that's the more the second advanced way is like fast and slow signal split, and then another one is splitting the accounts between a scalp and swing. So this is more of just like the take profit and the position, and then splitting accounts between fast and slow signal. So that's kind of just another advanced way to make the losses small and the gains bigger by doing those things. So I think pretty much, and then the next one is having a higher risk to reward, having the highest risk to reward. And then I don't know of anything else other than increasing your win rate. I don't know if there's any more kind of crazy techniques you could do. For the most part, it's knowing when not to do something, and that's by finding out statistics, and then also having knowing your trading system and finding a fast and slow, and then a near scalp target, profit target, and then a far one, and having a split strategy to where you're open to being able to have a quick take profit to minimize the drawdown, but at the same time also open to a home run, a money ball and a home run. It's kind of what I call a scalp and a swing, is having a home run strategy and at the same time having a money ball strategy, to where you could benefit if if the statistics or probability benefited you during that time period. But that's the overall philosophy, and the practicals are in the automation. I'm using NinjaTrader, and I really like this oh, it looks like we're doing well. So technically, we're almost in profit enough to pass 2 accounts on the evaluation. So you can see here, once we get to 53 grand, we've passed 2 accounts on the evaluation. And boo-hoo that these accounts didn't make it. We're just going to go slow with those and then waiting to see how things go. But this looks ideal, like it could make at least the scalp. And very questionable if we're going to make the swing. But it looks like we're getting ready to possibly break the 1 minute market structure. Looks like it's coiling. Now we got a war between the bears and the bulls right now. They're gonna start fighting. But for the most part, the 5 minutes bullish and the 15 minutes bullish. So we would have to assume that it's gonna go a little bit higher. And if we were to just pull back, we have a naked 15-minute breaker here, and that's our target to where we think is going to at least touch before it reverses. So if we touch there, I'm going to lift, it's sad to say, I'm going to lift the parameters of the auto liquidation on the slow accounts, because then they are technically up, because for one, I would have passed the second account, and it doesn't benefit me to trade the second account anymore. So there's only 2 accounts left once I pass the second position account. Once this is passed, it's like really close. I only have these 2 left. I'm not trading the sim. I'm just gonna, I want to have 2 left, and I could split those in half to where one's like a fast signal. I'll try to take it today, and then I don't know. We'll see what happens. We'll put it, but as far as what I wanted to show you was the automation I'm using, and that's using the Trade Devils Indicators Autoflow bot. I have 2 bots. I have the Polarity ATI bot, and this Polarity ATI bot is very two-dimensional. It's only got trend and regression. It's based on stacked imbalances, which is related to the delta and the order flow. And then this one has got different strategies, and then you can make it so that it's harder for it to be validated for a trigger. And I made it so that it's required to have at least 4 of these signals at any given time before it gets me in. And then I want it to go in one direction, which is long, because we have that 15-minute breaker we want it to go touch. And then we want it to occur within these 4 signals, and that condition being met to happen within at least the last 8 bars. And so far I really like this. I want to do more back testing to see if there's something tighter, just because it'd be nice to have a fast and slow signal for this in the delta. But so far I really like the volume squelching, the stacked imbalances. They kind of go hand in hand as far as like a trend that's forming. And also the delta rise. Those are the 3. The delta rise, stacked imbalances, and the volume squelching are like really good for trend. And then as far as like a reversal, the delta sweep and the exhaustion print and the extreme POC are just good for like reversals. And when it's paired together with a stacked imbalance or a volume squelch or a delta rise, they make for really good entries. And it looks like we're about to take profit close on the scalp. We're getting closer. I like to look at the RSI bands that we got. 14 period, 68. 68 setting. And it's flirting. It's trying to fake people out, and because it's moving so slow, and make people think it's going down. We don't know. We're just in profit right now, and we're getting closer to our target. We want 53 grand, and we're just so close. I think we're getting closer. We're so close, and we're just gotta be patient. And I think this doesn't really register here until we close the trade. I think that's correct, because this is not even moving one bit. We would need $240 to pass, and right now we're gonna get that scalp met, and then we're gonna see where things go from there. And another thing to help prevent loss is break even. Moving stuff to break even is another practical. It's just for the swings, I like to let it breathe, and I like to let it. There's a setting in the bot to where you can let it go to break even when the risk to reward gets to like 1.5 or something, and it did. It got to 1.5 and it moved to break even, and so the swing is already at break even, and then this is the stop loss for the scalp. We're giving the scalp a chance to touch it, and it looks like it's going to be successful. But that's kind of another practical is just taking risk off the table. But I think there is an art to it, because if you do it too early, you risk getting knocked out of your position and where you entered, and it's actually valuable. There is, I think, entry is also its own alpha. Like win rate is like a form of alpha. Bias, correct bias over time, I think that's associated with win rate loosely, and then also entry alpha. I think there's also an entry alpha, and having a really good
Order
entry
filled.
to where you can move it to break even and taking risk off the table, and I find that to be something that also minimizes risk, which is moving things to break even at the appropriate time. But that's pretty much it. Most of it was already listed, and most of them are rules, and if you can automate most of them, that's the biggest practical I suggest. And then, because then that pretty much takes care of a lot of things, and then it just, all that's left is discretionary. And then the 2 pro tips would be splitting accounts between scalp and swing, or like your account that you could risk splitting. So if you had like a 50 grand account, like that past example, you could risk $500. You split the $500 into 1/3, 2/3 for the scalp and swing. And then with the scalp and swing, you could break it down even further. So if you did 1/3 of $500, and that's roughly 500 times 0.33 is 166. So 166, you did 1/3 of that, and then you would save $55 of the 166 for a slow signal, and then the rest of the 166, the remainder, like the 110 roughly, for the slow signal, to where you're able to limit the loss. I mean, so yeah, a higher time frame is usually the slower signal, and knowing good fractal time frames is important as well. And if you want a good example, you can look at my Twitter page. It's got them laid out. It's the pinned message on my profile, and we got the yearly, weekly, monthly. So it's the highest time frame to the smallest. Personally, I like the 15-minute for my slow, and then I like the 12-hour for my daily, my swing kind of bias. My daily time frame for the intraday is the 15-minute market structure break, and then for the swings, I like the weekly and the 12-hour. So that the weekly market structure break is like stronger than the 12-hour, but the 12-hour is like the entry, the beginning of wherever the break is to make that the dominant bias. But I hate going lower than 15-minute. Like today, on the entry, looks like we're almost at the 15 naked breaker. So we got to get ready. So we did hit our take profit on the scalp. We're already $80 in profit. We are $66 away from 2 accounts passing the evaluation. So technically we can close this now.
Order filled.
So now we have 2 accounts passed for evaluation, and then now we got 2 more that we could use the bottom 2. So we would have to change the risk parameter set by trader, and we're going to disable it, and we're going to use it in the short. So we're going to try shorting too today. We'll see what happens. Risk parameter set by the trader, and we're going to disable, apply, okay. Alright, so now those are free. We can trade them now. And then we're going to shift the bot to where we're going to first shift this. It's the 15-minute. So we want this to break on the 15-minute. I'm not sure how I feel about... we could do 5-minute and see what happens. We might be able to get a small scalp out of it. But we'll give it a try. Just because we could be entering something to where it would benefit us. We don't know yet. So because the market just opened, we could kind of take a look at Yahoo with the S&P 500 and see what the forecast says. And if the forecast is in our favor to go short, we'll go short. But for the most part, I'm not sure. But I know the institutions are bearish. So any kind of high time frame area we get, it's worth trying. Because there's a good reward to the downside. So let's go ahead and see what the intra-week cycle forecast says. So this is saying up. We don't know how long that will last. This is saying all the way into February 1st. But if we put the decennial cycle on and the annual cycle and the 4-year, it kind of tells a different story. I don't know. We could blow through it. You know, like a lot of people are thinking it's going to go higher for longer. So it's possible. I don't know. I just think with the institutions, they're going to make it hard for them to lose money. They'll be aggressive. So one idea is we could be coming into some volatility. All right. So I did promise someone that I was going to put a screenshot in the Discord for these charts right here. So we'll do a screenshot. Okay. We'll do one of these. And then this is my Signal server. There's that. And then it's cool because you can see it. And then we'll go to the Indu, which is the Dow. Okay. And then this one's not convincing. Okay. Cool. So that's in. And then we know the S&P 500 short on the bias for institutions. So we're going to try a short. So that's done. We looked at the cycle forecast. And then we got the market structure break ready for a signal on the 5-minute. So we're pretty much waiting for that. And we're just not going to activate anything, but we're going to set things up. So right now, we can get rid of one of these. This one's 28.29, so this is the one we want. This one is 27.28. We don't need this because 27 passed the evaluation. Alright, so then what kind of signal we got? 4 hours bearish. Cool. So now we want to set up the bots. We're going to set up this for 28th right here. Oh, this is the this one. So we'll pick that 28.29. We'll enable it. And then we want it on the short side. We want it paused. We want 8 bars. We can do that. Yeah. We'll allow it for one shot. We'll see what happens if we can get to an exhaustion print or anything like that. So that's set. And then we need to set it to the right account. So 28. Did we set it to 28 here? Yep, it's right there. So that's done. This one we need to set to the 28th. That's done. And then this one we need to set to the 28th. Alright, and that's done. Cool. So if we were to get a reversal, we're ready to pounce. We're even on the 5-minute market structure break. We're waiting for that first one to break. We did release the permissions just on the perimeter, so of auto liquidation. So we disabled it there on the 28th and the 29th. It's disabled, so that's done. So yeah, you witnessed just how I manage my risk. I obviously am overriding one of the rules, but it's because we're coming into a 12-hour break retest, and because of that, it's now a high time frame, and these accounts were reserved for high time frame anyways. So I'm okay with taking a trade to the downside for that to take effect. So we're already ready, and we're just waiting for things to flush out. We're just waiting. And it could keep going, or it could break down. So one thing we're going to also check is my oscillators, proprietary indicator, the DBT Momo, which is belongs to Oasis Trading. I like their oscillator, specifically on the 12-hour and 8-hour. I like that kind of confluence, and we're going to take a look here, and it looks like we're at resistance here on the 12-hour resistance, and we could maybe make this the left shoulder and make a new high. We'll see. I don't know what's really going to happen here, but it's really interesting to see how far we'll go. We're right now at the fake out line, so it'll either fake out here or it's going to just go, and we can't be for certain until the market structure actually breaks on a lower time frame. So right now we're in that naked 15-minute breaker that's there, and we're going to look at it here. It's the top of the 15-minute breaker is roughly there. So that's the zone we're looking at, and we want it to break down, and we'll just kind of monitor from here and get an alert that I have. But the best time to get in would be the 15-minute market structure break. But we're anticipating that maybe today something's going to happen. Maybe we'll just do it like this. We'll just wait here with this 15-minute market structure break. But I think, yeah, that pretty much sums up the lesson. Is a little bit of live trading, the risk management rules, the tools to use would be definitely some automation, TradeBot, trade plan, to help keep you accountable, to make a track record, and then automation with whether it's Rithmic, to set auto liquidation rules to keep you faithful to those rules, and then also having high risk to reward. If there's some way you can automate that, and then splitting accounts between fast and slow. The discretionary parts are the ones that are going to be the ones of focus, which is the splitting of the accounts and fast and slow, signal, the position type, scalp and swing, and then trading within high statistics. And I don't know if I recommend option statistics. I had a talk with my buddy about the delta and the probability because of the delta in the Greeks of the options, and I'm just not bought into it. Someone's got to present a case study to where those probabilities are true. I think if it's taken too much as gospel, I'm already kind of skeptical, because for something to be like a certain probability and that known, when something's that known in the market, you kind of have to question the alpha, if the alpha has been eroded, and if that probability is actually true. And when I'm saying that if the alpha has been eroded, I'm saying that maybe because that's so widely accepted and widely known, that maybe the validity of that, the option Greeks and the delta probability actually being true has become slowly untrue over time because it's so taken as gospel. Because that's kind of how things go in terms of trading systems. In trading, is that the more people that do it, the less alpha there is, because this is so widely used. And if it's so widely used, you kind of have to wonder how much of the alpha really is pure. And that's kind of why I'm not so keen on that option delta and its probability. But thanks for watching. Hopefully you learned something. See you in the next video.